If you follow the markets on a daily basis like I do, you're probably seeing some of the perma bears continue to double down on their major collapse scenarios. And this is a collapse for stocks, collapse for the stock markets, collapse for Bitcoin, collapse for some altcoins as well, and even the real estate market. Many of these perma bears continue to double down on their calls over the last 2 years, as they need the market now to go down in order to recover any of those losses or just prevent their ego getting destroyed even further. You may have seen some recent stuff of other traders out there talking about 70% corrections on particular stocks and markets that have to go down in the next 6 to 9 months. But the data isn't saying that. I want to show you the data today and for you to go and make your own mind up, because you've found your home of macro cycle analysis, studying the past to forecast the future. We're looking at Bitcoin, cryptos, the stock markets, and the real estate cycle today. Hit that like button. Thanks again for joining me on the channel. And of course, subscribe if you are new here to the channel. Guys, this is a fantastic quote. Plaster it on your walls. We've got heaps of data to get through. Stock markets, Bitcoin, and altcoins as well. I want to see how they're progressing after that capitulation, that significant crash that we saw just last week. The stock market is never obvious. It is designed to fool most of the people most of the time. I'd say it's not necessarily never obvious. Sometimes it's obvious. When the trend is up, just go with the trend. Make life easy for yourself. Learn a trading system and go with the trend. The markets have been up, so why the hell fight it and talk about trying to short the market? I think that is a massive ego thing on the part of traders, analysts, media, any sort of person that follows the markets. They're just trying to say that they called some sort of top, even if they are so freaking early. Maybe they're a year early. If you've got any sort of leverage, there is almost no chance you'd be able to hold that position and be that early in the market. As I'll quote myself in, I don't know, third person, you could be right on your theory, but wrong with your timing. That does not make you 50% right. That makes you 100% wrong. That just means you're not going to make money. You will lose all your money trying to do that. And unless they're actually trading the market, then, well, if they are trading the market, then they're going to lose. But if they're not trading the market, they're just talking about it, then it doesn't matter. They can just keep talking that the market's going to fall, but they don't have any money in it and they're getting paid to say that the market's going to correct. So let's get on with the data. First piece from Tom McClellan, who is the inventor of the McClellan oscillator. As you can see from his name here, OSC, the oscillator. We've used that a fair bit. It tends to work out pretty well. Doesn't mean that I agree with everything that Tom's putting up on his X account, but an interesting one here. Stocks making new lows is one of the steps on its way to delisting. The numbers of NASDAQ issues, so basically the number of stocks that are in the NASDAQ, have been going down. Essentially, it's been declining, but the comp, so basically the NASDAQ composite, keeps rising. So we all know, or we should have heard of that by now, that the stock markets are going to new all-time highs almost every other day. There's been a slight correction over the last week or so, week or two, but you've got new all-time highs, new all-time highs and new all-time high daily closes for Apple, Microsoft, a couple of others there on the tech stocks. We can get to that later, but they're the ones that come to mind as I looked at them just earlier. We saw this dynamic in the late 1990s. It took a while, but did matter. Okay, so just come back to this. You could be right on your theory, but wrong with your timing. Yeah, it took a freaking while for sure. 3 years, essentially, of these declines here. 2.5, give them that. And then you started to see the market actually fall from the tops there. So you could count that from here and say, well, we're into that 2.5 year period right now. Is this it? Possibly. Like, maybe I'm wrong. Maybe I'm wrong. But the charts and the markets essentially say don't bet against them. I mean, if you've got a line that basically goes straight up and to the right, how many times are you actually going to be wrong in a 30 or 40 year period? Not very often. if you just keep on the right side of the market. Now, that doesn't mean I'm a perma bull forever. There are going to be times in the cycle where it's probably best to not be dumping a ton of money into them, but there are definitely fantastic times to be getting into the market and putting more money in than usual. So you want to be pyramiding in the right way, not in the wrong way. So pyramiding, putting money into the market. You want to buy more, put more money when the market is down as opposed to more money when the market is up. The psychology around all that is that most people do it the opposite way because they're unsure and they put a little bit of money and then they put more money and then they put heaps more money. And it typically looks like that. They'll put a little bit here, they'll put more here, and then they'll start dumping an absolute ton, all their wealth in it at the top, and then it corrects, and basically any of the profits they made from here, they lose all of it. So that happens almost every single cycle, and that's another part of how these markets continue to, well, they'll collapse further and further. You get that snowball effect of people having to sell because they need to go and pay back certain loans that they got out, or they need that money to go and live because conditions have, the economic conditions have deteriorated so badly that they now need to make assets liquid. And that's basically what happens on each of these major declines in the market. Now, it hasn't happened for quite some time very severely like we've seen from the GFC. And, you know, if you are a regular viewer, you know the idea of the 18.6-year cycle. We're in this winner's curse phase. And over this decade, or the 2020s, right, later this decade, I suspect we're going to get something like that that basically resets the market. Now, with that in mind, and what I've been talking about with markets going up and to the right, there's more chance of me being wrong on a collapse than right because of how many times or how many years the markets go up compared to the years that they go down. Just think about that for a minute. I do think we're going to get some significant correction in the coming years, not in 2024. I've said that many, many times, probably not in 2025. When I say significant correction, I mean like literally taking out some of the significant lows, the numbers that people look for down at these bottoms here. Say for the NASDAQ, we're looking at least down to 14,000 because most people look at percentage corrections, right? You want to see it go over 20% correction. A 30% correction from the current price would take us down to that low at 14. And you've even got analysts calling for a 50% correction from this price. That would take it out past 10,500, which was the 2022 low in October, right? I can't see that happening in 2024. I don't want to bet against the trend because the trend is your friend until the end or until the bitter end. And I don't think there's a bitter end just yet. We've still got a fair bit of time, especially from the data that we are seeing. Using old mate here, Tom's analysis as well. Even if there are more NASDAQs trading lower, making new lows, there is still more time that this could go on until you see a peak. I'm not trying to replicate this exact 2.5-year period and say exactly from right there, 2.5 years later, it's going to correct exactly the same, because that doesn't happen. But you are seeing signs that we're leading into some sort of peak. Trying to time it exactly like last time, probably not a great idea. So we look at the probabilities and look for a time frame and then add on other signals to let us know around a period that it could be correcting. But we've got to watch the signals at that time as well. So winner's curse, plenty more upside. Before we get too early into the trade itself, into the big short, the big correction, the big, crash, buying in all-time high territory, as long as it's at least 6 months, you have a time frame, a time horizon of 6 months or more, typically has shown to be net positive. So invest on any day. So you just basically buy any day of the year. These are your returns in the gray bars, or invest at a new high. So basically a breakout. Many people try to short all-time highs. Don't try and short all-time highs. You'll get wrecked. You'll get wrecked like the professional traders out there on YouTube that have been talking about shorting Nvidia quite often. They short Bitcoin from 30 grand to 70 grand. They short Apple. They short everything that's going to new all-time highs. They have zero clue because the data says do not do that. Of course, you need to stick to your own plans and do what you think is right. But even just being any sort of dummy, all you have to do, invest at a new high. Of course, have your stops, have your risk management in play. Invest at a new high. The data shows over the last 35 years, 36 years, that you're going to be better off doing that as long as your time horizon is 6 months or more, and you're going to beat anyone just investing on any day. So you do with that what you will. I think the main thing to take from this is don't try and short new all-time highs. There will be some sort of mega crash that comes up eventually, but that always happens. It's just about not being too early for it and then missing out on the ride to the upside. So I think this is what happens first. And not only do I think it, it's actually happening. We broke out a new all-time highs again in late 2023 in December, and it's basically been up ever since. Could you imagine trying to short that market as it breaks out a new all-time highs? You're basically underwater. There is almost no one that can continue to hold that trade all the way up. The S&P 500, same sort of thing. The breakout there in December of 2023, it's been going straight up from that point. All right, so we've got a few other bits of data here. On pace for a record low percentage of stocks beating S&P 500. I see this as bullish boom time. So there is a talk about the breadth. We've covered it many times on the channel. Subscribe, like, you guys know the deal. Essentially, this is just talking about there's few stocks pushing the index up and a lot of stocks that aren't making new highs. So basically, they're either going to new lows or they're just not making new highs as well. You can see it's at a record price here, but when you can just look back at a few of the other data points, if you even just wanted to use this one piece, 1998, 1999, there is 2000. Now you've got a lot of stocks making new highs. And I think we all know, hopefully, from 2000, that was basically the dot-com bubble on there. And then obviously the NASDAQ was much bigger because they're tech stocks being dot-com bubble, boom, and the bust there. Leading into that peak, you've got very few stocks taking the lead, and then everything else tries to catch up. That is exactly what the laggards do. The laggards will lag until the end, and then they all start to catch up together. And so meanwhile, the smart money has been buying and making the gains on the way up for the last several years, and then retail comes in at the peak. They start to buy up. All of these other stocks push to new fresh highs, and then eventually it collapses pretty soon after that. So again, I think there's going to be a major crash, but I think this actually happens first. More, to me at least, more of the information points towards that than the alternative being that we're going to crash in 2024 or crash in 2025. It looks like we're basically winding up again to get to this point here of some big booms to the upside. Now, I don't just take that one piece, and you can find examples of how you can see more of the stocks reaching highs from the lower points. You can see this bar here in particular, you've got there, which is 2009. That was the low of the stock market. And then you have it winding up here towards the end. So that's 2007. You can see it had the lowest number of stocks beating the index itself. And then you had more of the stocks beating it from the low. So that's why I don't just take this one piece and apply it to everything. I want to layer the pieces of data that I'm sharing with you in today's video. So on top of that, Seth is also looking at here, is this cycle about to reset? So this one looks at the laggards versus the leaders. Your S&P 500 is the leader, Russell 2000 is the laggards, and just a little bit of a pattern here that he's shown. You've got 2011, basically the S&P beat the Russell by 6%. The Russell was down 4%, the S&P was up 2%. So it essentially beat it by 6%. And that's what they've done here. So the next 2 years, the Russell was down and 2013 was down. And then the S&P, the Russell beat the S&P in the following 2 years. And then the S&P outperforms the Russell for the next 2 years. The Russell outperforms the following year. Then the S&P has a 3-year streak and then a correction. Now it's on a 4-year streak. So maybe we're getting into that time for 2025 or maybe even 2026 where you get the laggards catching up, which is showing on this data as well, and is showing here as well where you'll see more higher prices, essentially looking at the time to invest, at a new all-time high, and you'll get a longer move to the upside there, that the laggards could catch up, and that basically brings you into the end of yet another cycle. On to more on the S&P. Year-to-date performance in US elections. Okay, check this out. Best ever US election year since 1950, when the S&P SPX has gained between 13 and 17% in the first half, which it has. This is the black line here. It's always been positive in the second half. Worst second half return was 3% in 1976. So going back nearly 50 years, or roughly an S&P 500 being 5,675 by the end of the year from this current price, right? So that's a year-to-date performance in US elections. It's on track to be one of the best of all time. I don't want to hype it up too much because, I mean, I'll just let the data, I'll let the charts, I'll let the market do more of the talking than what I do. And I know I do talk a fair bit. So in that sense, let's move on. It's showing pretty positive signs for the second half of the year. Always, 100%, the whole year is going to be closed out positive, right? Fear and Greed Index has been reset or in the process of resetting. This is for the stock market. It had its low here in fear in April. That was your correction going back on this one red monthly bar or candle, depending on how you love to look at the markets. There are your candles. And now it's basically on the reset grind here. Move up, higher low, beautiful. And the fear coming out of the market, moving back into a neutral state and potentially into the greed. So the markets they're overbought. Too many participants. It seems like it should crash. It should correct and all this sort of stuff. It just put in a new all-time high daily close. So I'm a record on repeat here, day after day, new all-time high daily closes. And the same thing, the media, these professional traders, these people who say they put out their results, keep trying to short markets on the way up. I don't know where they're getting their money from. It's definitely not mine. I'm probably not theirs, and maybe it's other people's money. I have no idea. But trying to short markets that keep going up, you've got to be getting your money from somewhere. It just seems like losses after losses. Taking a look at the stocks themselves, Apple, new all-time high daily close, and it just pipped out a new all-time high price as well by about 18 cents. So it did reach a new all-time high. Amazon, new all-time high price, and Microsoft. So there were the three. Nvidia 122, so it's holding up here, 50% level to the downside, about 108, and back to that previous accumulation zone, about $96 is the top there. So pretty well still on a mega run here. And according to the data I've looked at there, I don't think we're going to come to an end anytime soon, but eventually when it does, we'll be here to cover it. On to cryptocurrencies, Fear and Greed Index, again, also resetting for crypto at 50. Pretty decent after going on finally a streak to refresh the market sentiment. We got 30 on the index on the 25th and 30 on the 29th. So a couple of good readings there to at least start that market sentiment refresh. I definitely like seeing that. Now, if Bitcoin was to correct from here and take out those lows, as I discussed in yesterday's video, looking at specific price targets to the downside. I've mentioned heaps of times, I prefer zones of lows and like to get in, and then zones above to get out. I'm not trying to pick an exact low. Maybe this isn't the exact price low. Maybe it goes a little further. I don't know. It's the crystal ball is needed for this side of the chart. You need a crystal ball for the right-hand side of the chart. But the big one here is that the market sentiment reset, if it is to put a lower price in and then put in a higher market sentiment reading, basically the Fear and Greed Index, then you're starting to get a divergence on what the market is actually feeling and potentially going to do, as opposed to the price chart itself, where you'll see it and it might go a little lower. Maybe it goes to 56 or 53, but people aren't as fearful anymore of that lower price. That would be an absolute banger entry when you look at what happened at the low. So this thing happened 18, 19 months ago at the low. So you've got the November collapse, FTX collapse, and then it went slightly lower in price. You had the June low, which was the extreme fear, and you can see it went lower. But on the Crypto Fear and Greed Index, here is your June lows. And then in November, here are your higher lows. So higher lows for the market sentiment. People were less scared of the market going down by that point. And it takes some time to understand how it's going to play out on the chart. But if you can decipher this, you're in for major gains, because you can start to see a low form. Now, I think if that happens again, and we see, over the coming couple of months, as we've been looking at 4 to 6 months underneath the old all-time high, you've seen me talk about this heaps of times before, after the trigger in March. That time frame is coming up in July through to September. So give or take, but it's in this period now. And should we see that price do that and then start to push away, I suspect that we're on to the early starts of that trend. So it's all looking relatively good. Also seeing the Google Trends term, the words here, dying off. So the interest in searching for Bitcoin dying off. You want to see that at these lower points. It's definitely a stealth move, or at least what I call a stealth move. The public's not interested, retail's not interested, people aren't asking their fund managers or the ETFs or whoever that they want to invest for them. They're not searching about it and looking for it, which means those companies aren't looking for it either. They just have the products ready for when the interest picks up. And you can see the interest at the moment has died off to a new equal or fresh low. So yeah, at the moment it's a new low, 18 on the reading here for this current week. And the lowest point we had previously was 19. We have to go all the way back to the breakout in October of 2023. So this was before everyone started to come back to the market. You can see that point right there. That was the lowest interest in Google terms. We are now at an equal lowest interest at a way higher price, basically 100% higher in price, and the same sort of interest is dying out to that point. So it's similar to what happened in the previous cycle. The interest died out, 2020s, and then market rips them a new one from there. They all come in late again. They miss the stealth move and they miss the higher lows on the stocks, on the cryptos, and they get in late. So it's not a bad thing to be buying at fresh highs. There's nothing wrong with that, but it's just holding the damn thing for way too long, especially with volatile assets, cryptocurrencies, because essentially they can correct pretty damn hard. Now, some that haven't corrected so hard, let's have a look at some cryptos here. Solana, putting in the upside, you can see one day the 2-bar chart here, it has crossed the 150 now. We need a couple of daily closes here. The 50% level is 149, so I called it a nice round number of 150. Good signs from yesterday. Maybe it's all off the back of the ETF speculation that there's going to be an ETF approved for Solana. Maybe not. Who knows? The chart is up, and this so far has been yet another higher low form at $122. So I talked about this all the way back in April. You've seen my tweet on April 19th, looking like the market was putting in higher lows. Spare me a few cents there between the 119 low and the 118.89 low. So spare me a few cents, and essentially you've got a double bottom that pushed off, and now we've got a slightly higher low here again at 122. So that has been a pretty reasonable chart pattern there, especially with the higher lows, and now trying to push higher above the 50% at 137. Next target to the weekly chart is 165. So it's right above this red line through the middle. And then we go towards 190, 210. So 190 is above these tops. Then 210 is obviously the current top for Solana. So it's on its way. It hasn't got those longer term timeframes confirmed yet. And those longer terms are the weeklies. We're only at the daily point for Sol. But you definitely like to see that compared to other charts, which are basically still heading down. And I haven't picked on XRP for a while, so let's have a quick look here. I mean, it's putting in slightly higher lows in April, but it really isn't moving away fast. But anyway, maybe this is the time for the XRP holders where they finally are able to make 10% in a year. So on to Render. This one here, still holding up. There is still the possibility of filling this gap back here, roughly $5 to $6 or $7. So call it around $5 to $7, and it would still be within a healthy correction for an altcoin. Now I've got the average true range up here, as this has been part of the stealth plan. Basically, the ranges of the bars squeezing, getting very small because the interest is dying off, and we can see it there. There it is. The Google search terms, Bitcoin dying off, which would mean, generally speaking, the rest of the cryptocurrencies are also dying off, and Render has done just that. Bitcoin has done just that. So we're into those stealth. All right, there we are. And these were the price targets that I had on yesterday's video. So take a screenshot of that. and we'll have a look at that in the coming videos this week. You can see the dying off here of the average true range of the bar. Previous cycles, look what happened. Average true range picks up, dies off, dies off, dies off, and then you start to get a higher low form. And by that stage, you're really a decent way from the stealth zone. All right, so keep that in mind. Once we get to that point of the bars increasing in range, it could potentially be, well, I mean, the last cycle was over 100%, going from 9,000 to 18, 19,000, but that is another sign that you've probably got further to go in the move. Now, also on the channel, I looked at 30K candles or bars. That's for the month, and I can see there being monthly bars over $30,000 just based on what we've seen in the past. These got up to 20 to 26,000 for the month. We've seen a couple of those, or one of those already, and in each of the cycles you see sort of 3 to maybe 4 or 5 times what the bars were early on as it starts to creep higher. So we've had those candles now. I think as we go higher, this is going to break to new highs. I can't imagine many people would disagree with that. So I guess it's not the biggest forecast out there. You would expect the candles and bars to get bigger. What I'm trying to do here is use the chart to identify when that time is about to happen, because when you start to see those things, you don't have long left, and you probably want to start executing your exit strategy. You're not trying to get the top, remember. You're not trying to sell the top. If you don't have any other way to get out of the market and all you're looking at are the ranges of the bars perhaps, and you can see the craziness coming into the market, maybe you want to start executing some of those sells. Don't just dump it all on the first time it does it, because there's more that it could happen. You know, the next month could go another 30 or 40 grand in that month. But there's not much time left when you consider the entire cycle. You know, the top here was April to October, November, 6 or so months, but the entire move from the low to the top, about 3 years. So 6 months sounds like a long time, but when you, again, look at the entire cycle, not that long. So render still in a healthy position, and it still has further that it could go down and still remain in a healthy position. Timeframes, however, let's have a quick squiz at this. This goes for any other altcoin or any other degenerate crap that you're looking at. 16 weeks from the top to our current week that we are in. Last time it did 16 weeks, there's a top. It was just coming out of the bottom here. Now, I'm not saying that this has to be the bottom. It's nice that it's bounced off the 50%. It's agreeing with the 50% right now, but I've talked about the level between $5 and $7 a couple of times. Let's just have a look forward. When did it break out? So from that 16th week, how many weeks did it take until it broke out of the consolidation at the lows, and then out of that previous top? So there's your first real significant breakout bar, around 6 to 7 weeks from this current point, and then to that breakout of those highs, 10 weeks. So 10 weeks from now is about around 26 weeks. That would take us out to September, and that is in the realm of what I'm looking at with the median time frame underneath the old all-time high. Now, this is specifically for Bitcoin. So even if this lags a little bit and takes off a few weeks later, which would take it into October, November, maybe after the election, I would still consider that a pretty significant win, and it's advising us. It's giving us a few signals, if we see higher lows start to form there, that you're probably going to see higher prices on this, and it's just lagging Bitcoin by a small period of time when you consider where it currently sits in the entire move. Remember, that would be roughly about 6 months, and it's giving you a warning coming into it. Now, what do we need to see until it gets there? Obviously, higher lows. And that would happen throughout this next couple of months, maybe even up to 4 months as we get to that election. I think, just from what I've seen over previous years, leading into the election, there's obviously some volatility in markets. If there's indecision and uncertainty, maybe they start to die off at that point. So, you know, I'm keeping that aside just in case. But if I keep seeing higher lows, it's not going to stop me from getting into the market as it breaks out through that, if it breaks out through that period. So we've gone on pretty damn long. Casper, just as a quick recap here, you've got 10 weeks to the low, 10 weeks to the low. We just put another top, and it looks like it was a false break, breaking up to nearly 20 cents. So 10 weeks also takes us out to September. Maybe we start to see it climb out of that point leading into that election, or maybe it continues to consolidate around this 50% down to about 9 cents up to 20-ish cents. Then we just got to see if it remains in the strong position and if it's able to break out with the rest of the altcoin market sometime Q4, maybe into Q1 of 2025. Heaps that I've covered in today's video. Thanks for following. Subscribe, like, links in the video description for our free crypto and economic report that came out last night. Or if you want the free Ultimate Trader Accelerator, link to that will be in the pinned comment down below. See you guys at the next video. Until then, take care and peace out.